Ayo, good people, this is your boy one and only PROF underscore KT. This is your boy one and only Prof KT. As you can see by the title, that's what I'm going to talk about today. I hope you enjoyed the video. Stay tuned and don't forget to like, comment, share, and subscribe and hit the notification bell for next time I drop. I was born in a poor family and I still managed to make it. It's not all about where you come from, it's all about who you are. I know people who come from poor families and still manage to make it. And I know people who come from rich families and end up poor. It's not all about where you come from, it's all about who you are. Ayo, good people, this is your boy one and only Prof KT, the intelligence entrepreneurship child teacher in the world. People usually ask me from poor family, how did you manage to make it? One thing I will say is, in life, in order to make it, you must have a vision, be on a mission, and come up with strategy to be where you want. Let me tell you something. Many people ask themselves this question, why so many times I try so many things and failed and changed the journey? Let me tell you something. Road to success will always change the journey, so always be ready to move on. Yo, uploading daily and editing daily and doing all that things is not that easy. I work hard. Can you see how I work? But you know what? You know one thing I like, the earlier the better. Hard work always pays. Rather suffer today than tomorrow. Let me tell you something that usually pisses me off. People usually do, especially broke ones. People usually make money to spend. They don't make money to expand. Don't make money to spend. Make money to expand and you'll never go broke. In today's video, I'm going to talk about what's the difference between venture capital and angel investing. Understanding the difference between venture capital and angel investing. Entrepreneurship often requires external funding, and two of the most common sources are venture capital, VC, and angel investing. While both provide capital to startups, they differ in their approach scale, risk appetite, and involvement. Understanding these differences can help entrepreneurs choose the right funding route for their business. Definition and key players. Angel investing. Angel investors are typically high net worth individuals who invest their personal funds into earlier stage startup. They often have expertise in entrepreneurship or industry knowledge and seek to support innovative ideas with the potential for high returns. Angels tend to invest smaller amount, usually ranging from $10,000 to $500,000. Venture capital involves professional investment firms pooling funds from multiple investors such as institutions, corporations, and wealthy individuals. These funds are then invested into startups with high growth potential. VCs usually invest larger amount, often from $1 million to tens of millions, targeting startups that have already shown some traction or market validation. Key difference: angel investors are individuals, whereas venture capital comes from organized firms managing pooled funds. Stage of investment. Angels typically invest in the very early stages of a startup, sometimes even before the company has a finished product. This stage is high risk as many startups are untested in the market, but angels are often motivated by passion for innovation and the opportunity to mentor founders. Venture capital. VCs usually invest at later stages, Series A, B, or beyond, when the business model is validated and there is potential for rapid growth. While still risky, VCs seek startup with some proven traction, revenue, or market presence. Key differences. Angels focus on early stage, high risk startup, whereas venture capitalists invest in startup with more established growth potential. Investment size and structure. Angel investing. Investment by angels are more typical, smaller, and more flexible. Terms are often simpler with convertible notes or equity, agreements that can be negotiated directly with the entrepreneur. Venture capital VC investments are larger and highly structured. VCs usually require detailed term sheets, board representation, and formal reporting. They also expect a structured exit strategy such as acquisition or IPO within a certain time frame. Key differences: angel funding is smaller and more informal, while VC funding is larger and comes with structured agreements and oversight. Level of involvement: angel investing. Angels often take a hands-on approach, offering mentorship, industry connection, and strategic advice. Their involvement can significantly influence a startup's early growth and development. Venture capital: while VCs provide guidance, they are less likely to be as directly involved as angels in day-to-day operations. Their focus is often on strategic decisions, scaling operations, and preparing for exit. Key difference: angels are usually more personally involved in a startup growth, whereas VC are focused on scaling and maximizing returns. Risk and return expectations. Angel investing: angels accept higher risk because they invest at the earlier stage, often in unproven ideas. They seek very high returns, knowing that many investments may fail, but a few successes can yield exponential gains. Venture capital: VCs also pursue high returns, but their risk is slightly mitigated by investing in startups with proven traction. Their portfolio approach spreads risk across multiple companies, aiming for consistent returns over time. Key differences: angels take on high early stages risk with potential massive returns, while VCs invest later while with structured risk management and strategic growth targets. While both angel investors and venture capitalists provide crucial funding for startups, their approach, scale, and involvement differ significantly. Angels often offer smaller, earlier, and more personal investment, while VCs bring larger, structured, and growth-focused capital. Entrepreneurs must assess their stage needs and desired level of investor involvement to choose the right funding partner. I hope you enjoyed the video here, and if you made it this far, don't forget to like, comment, share, and subscribe, and hit the notification bell for next time I drop. You know what? Uploading daily and giving you entrepreneurship information is not that easy as you see full video out, because I work alone. Please like, comment, share, and subscribe, and hit the notification bell for next time I drop. I love you guys. See you on another video. Don't forget to do all that things. Follow. Yeah. I love you guys. One love. Thank you for your support.